Welcome to the Hamsig Analytics Daily Market Commentary. I'm Pablo Navarro. Today is Monday, November 12, 2012. For the market internals, the New York Stock Exchange advanced decline differential closed at negative 231. Nasdaq advanced decline differential closed at negative 188. We had 5 new 52-week highs for the S&P 500 and 15 new 52-week lows for the S&P 500. For the volatility, 475,000 contracts traded on the VIX today, with 71 million in total premiums paid. For the dollar-weighted put-call ratio in November, we saw a 2.36 reading, which is bullish, with 26% of the total premiums paid. And in January, a 0.56, which is neutral, with 51% of the total premiums paid. Here we have the daily chart for SPX. We have a flat day today, 0.15 up for the day, and we continue to be here consolidating around the 200-day moving average. As you can see here, we had this consolidation period with drop, and now we're stabilizing around this 1380 level. We want to see one of a bounce here of the 200-day moving average, and try to go for the 0 sigma of 1420. That's gonna be the target here. If we could break to the upside, maybe 1443, that would be more bullish here, and that would take us taking out this higher high. In case we drop lower, I'm looking for 1360, 1355. That would be a pretty important point here. Maybe start going higher after that. So that's what I'm looking at here on SPX chart. We go to the 60-minute chart. Here we have the weekly support, pivot, and resistance, and we are right now basically nowhere today. We have a pretty flat day. Remember, we have some holidays on the markets today, thanks to Veterans Day, and we're looking for lower prices, maybe coming down, testing this 1357 level, and that would be in line with what I'm looking for as a downside potential. On the upside, 1395, that's gonna be weekly pivot, and it will go higher, maybe go for this 1470. That's pretty close to the 20-day moving average or 0 sigma we just talked about. So very important here to watch these two levels, 1360 and 1417. That's gonna be what we're looking at here on SPX. For our moving averages chart, here you can see it. We are at the 200-day moving average, and maybe looking for a small bounce to the 100-day moving average at 1403. If we go to SPY, here we have the daily chart for SPY around the 200-day moving average. So far it's holding. We wanted to continue to hold, maybe looking for 140.50, and if we get a bigger bounce, try to go for 142.06. That would still leave us on a downward trend in the short term. To take that out, we want to come at least to 143, 143.30 to break the pattern we have, lower highs, lower lows. So that's going to be important here if we want to start turning around. If we go to our 60-minute chart here for SPY, we're looking for 142 on the upside and 136 on the downside. Those are the two numbers watching here. We go to the Qs. Here we have the 60-minute chart for the Qs. I'm looking for 65.35 and 62.30 on the downside. Those are the levels here I'm watching. And on our longer time frame, the daily chart, I'm looking maybe for a bounce to the 200-day moving average, and I would not suspect that we are going to break it on the first strike. So maybe come here and try getting short again to a lower here. Maybe see if we respect these lows, and after that we'll see what happens from there on. So we have very strong support resistance on the upside at the 200-day moving average, or 65.37. That's gonna be what we're looking here. IWM, the Russell 2000 ETF, also below the 200-day moving average. Pretty bearish chart here. We could even go on bounce to this 181.60 and continue to be on a bearish trend. So we have a long pattern to go here. I would suspect maybe come to the 80.60, even 81 and a quarter before starting to fail again. So I'm looking even longer term for lower prices, maybe get a bounce here, but still looking for this 77, 76 level I was talking about late last week. For GLD, here we have the daily chart for GLD. We have a flat day today. Important that we closed below the 55-day moving average. That was important here. Nothing to worry about. We're still doing good. Chart looks good after this couple of days of bouncing. We want the 20-day to hold at 166.9 and maybe start going for the 170 and even higher. That's gonna be pretty important here if we are able to hold this 20-day moving average. Silver. For silver, let's go to the daily chart. Interesting pattern, pretty flat today, down 0.5% for the day, and silver is getting trouble here at this 55-day moving average. You can see here we couldn't break, we went down, tested the 200-day moving average, and now we're bouncing. We want to see another test of this 55-day moving average and try to break that one. That's going to be pretty important, and if not, we're probably coming back here to this 200-day moving average, making even a more bearish here chart. So that's what we're looking here. And the last chart we're gonna look at is the VIX. We have a very interesting move here on the VIX today. The VIX today was down 10%, and if you look at the SPY or SPX, we did not move, which is interesting here. So someone is selling volatility here. Risk looks high here, and we were talking maybe coming to this 21 and a quarter. We broke the 200-day moving average to the downside pretty severely, and now we're looking maybe coming to 15 or even 14.6. That's what I'm looking here on the VIX so far. Pretty bullish action here for equities overall if you look just at the VIX. So I like this pattern here for equities on the longer term, maybe a couple of weeks, and try to go higher from here. So that's what the VIX was trying to tell us today. We'll see what happens and if it works out. We have a special offer by TradeStation. Get your HEMC Analytics proprietary indicators paid by TradeStation. Contact Active Traders office in Chicago, Peter Albino at the number listed below. Have a great day, and I'll talk to you tomorrow.